For the next hour, you'll be leaving the Show Me state and entering the Show Me the Money state. So stop what you're doing, grab a pen, and get ready to learn. Randy and Jake Floyd of Floyd Financial Group will be your guides for straight talk and honest answers about living the life you deserve in retirement. So prepare to be empowered. Now, here are your Show Me the Money hosts, Randy Floyd, Jake Floyd, and Jeff Shade.
Good morning. Thank you so much. Welcome to Show Me the Money with Randy and Jake Floyd, the radio show that gives you the straight talk and honest answers you need to help you reach your wealth management and retirement goals through smart investing and careful planning. My name's Jeff Shade, and as always, I'm just here to ask the questions, but the words of wisdom and solid advice, they come from Randy and Jake Floyd of Floyd Financial Group. I will start with you, Randy. How you doing today?
I'm doing great, Jeff. I'm just excited to be here. How about you?
I'm excited to be here, too, and all of our great listeners in Springfield, Missouri, as always. Hey, Jake, how are you doing?
Living the dream, Jeff.
That's right. Boy, we got a lot to talk about on today's show. Our telephone number, 417-889-7233. Write it down. You're going to need it. We're going to remind you later on in the program that you can use that to get in and sit down and talk with Randy and Jake individually. So let's get started talking about Trump picks for the different cabinet positions. Jake and Randy?
Yeah, for sure. There's been some exciting stuff out there. I think the thing that's kind of interesting to me is, and there's been a lot of talk about this too, how the left, liberal, legacy media, they realize that they're losing their position. They're losing their grip on us. There's been a lot of talk about this over the last week. But I will say this, some of these picks that Trump has made, I say some, actually most of them really back up what he said he was going to do all along. And that is basically get us back to really what I would call common sense. Now, there's been some people, they've been exposed that this guy's done this and she's done that and they've done that. And I just always say, I'll chalk all that up to politics. And the definition of politics, right? That's
I don't.
Politics, many blood-sucking organisms. So the politicking is kind of getting interesting now. But I think he's made some really good picks. And one of the things that I'm really kind of excited about, and some people were not too excited about it, was Marco Rubio as Secretary of State. I think that's a great pick. I think he's got a solid following. I think he's got a level head on his shoulders, and I've never really seen him play the political game as much as some of the other, people that are out there. So I'm kind of excited about him.
Yeah, I think honestly, he's literally probably the only pick that I've had any kind of an issue with. I just think he's a little bit too establishment Republican, but again, that remains to be seen. I'm willing to give the guy some latitude because he's done a lot of things that maybe I thought might not have worked, and it worked out well. So I really like most of the other picks. And to Randy's point, I think he's 100% right. I think he's doing exactly what he said he was going to do. And I know last week, Jeff, we talked a little bit about Tom Homan on the border. He was one of the zero tolerance guys back in the day with all the Dreamers and all that stuff. They kept trying to pin him down, saying, you're trying to separate families. And he said, I'm not trying to separate families. And they said, well, they have to separate if one's a citizen and one's not. He said, no, they don't. They can go back home with them.
That's right.
And they just thought that was the most ridiculous thing they've ever heard. But I think if you want to hire somebody to get the job done, I think he gets that job done, deporting those people. I think Pete Hegseth is also kind of a controversial pick simply because he's younger. He's pretty gung-ho. There's some interesting things potentially in his past. All these people he's picked, the establishment Republicans aren't going to like.
Right.
Which probably means they're the right people.
Well, if I'm hearing you correctly, in the past, we have picked politicians for these different positions, and I think of Elon Musk being part of the Trump team here, too. Do you think that we're better off in looking outside of politics and looking for people who have an expertise in a certain area to help us run the country? Because after all, in some respects, not all respects, but in many respects, we're a great big business.
Yes.
Okay, can you
absolutely
expand on that just a little bit here?
I mean, the bottom line is this country is a business. Because what's it made up of? Households that are what? Little businesses.
Exactly.
If you don't run your household on a budget, eventually, Jeff, the credit card company will no longer extend credit to you.
Well, yeah.
And that's kind of where we are in this country. We, the American people, have extended credit to our government to spend money on things that we don't agree with and don't believe in many cases, with now get this, really no accountability.
Yeah.
Yeah, I think to your question, Jeff, I think Elon and Vivek Ramaswamy are going to be amazing at hacking off these arms of the government that we don't need. A lot of people are like, well, what if they get rid of something we need? Then we'll put it back.
Right.
When you're carving a piece of meat, right, and there's a bad spot in that meat. Let's say you're carving fish, and you're like, oh, there's a little spot here that we don't want. You have to carve more out of that fish to make sure you get all the bad out. You can't carve it exactly right? You have to carve a little bit extra. And I think that's the exact same way we should be looking at carving out this government. This may be the only time in my lifetime that we get the opportunity to do this. And I just turned 40 a few weeks ago. A lot of our listeners are older than that, and that's fine. I'm just simply saying that we may not get another shot at this, and so we need to really go hard and cut this stuff back, because they will add it back as soon as they get back in, but it takes time to add all this stuff back. And so I think if we can cut it down, Elon said by his count there's about 428 government arms, government agencies, and his goal is to get it to 99, to get it to under 100. And so we'll see if he can do that or not. But I think even if he gets it to 150 or something, it'll definitely be right down the right way. Some of these other picks too. So like U.S. Ambassador to Israel, Mike Huckabee, I think that's a great pick. Secretary of Homeland Security, Kristi Noem, also a good pick. Interior Secretary Doug Burgum, I think that's a great pick.
Right.
And so as we're looking at these, obviously the Health and Human Services pick of RFK Jr. sent the old insurance companies and the pharmaceutical companies reeling a little bit.
Right.
But I think, as Trump said many times on the campaign trail, he said, yeah, we're going to make sure he stays in health and human services. We're not going to let him get into the environment or the economy because his positions on those are frankly not good. Right. But I do think if you direct him and you keep him within that vein, I think what he wants is really not all that extreme. I think there's a lot of people thinking RFK Jr. is just going to totally end pharmaceutical companies, which I don't think is true at all. But I do think there's going to be some accountability there where there hasn't been before. And I think everybody benefits from that long term.
I think the louder that we hear the media and politicians yell about these positions, probably the more validated they are.
And I don't think they've yelled and whined about anybody as much as they have Attorney General Matt Gaetz. You know, they've been all squirming on that one. I think they just know he's uncompromising. Some people say he's not qualified or whatever, but I think it doesn't get any more anti-establishment than Matt Gaetz. You know, he was part of the Freedom Caucus when they were trying to get McCarthy in. He was really solely responsible for getting McCarthy out. I like that pick. Again, he's kind of got a colorful past, but I think we all do. If you had to give an accounting of everything you ever did in the public eye, you know I wouldn't want to do that. And so when these people put Trump on trial or Matt Gaetz on trial, you know, I don't know that it's not fair for us to sit back and point the finger. You know, everybody makes mistakes. You know, I think looking forward, though, I think that's a great pick. I think it'll keep the establishment, the Mitch McConnells of the Congress, it'll keep them accountable because he won't just sit there and let them do the status quo that they've been doing for the last 40 years.
Do you think that if and when these picks are successful, that even the left will sit up and take notice and say, you know, we may have been running the government wrong all along. Maybe we should use some common sense. And as time goes on, even a Democrat would lean this way to pick people who are the best for these positions rather than doing it on a political biased basis.
I doubt it. I will say this. No, I think they're going to fight him every step of the way. But here's what I will say. Is I do think that they don't have to like it to benefit from it.
Okay.
And it's okay if we have to drag them kicking and screaming. It's like your 3-year-old, right? When he's wanting to jump off a rock that's too big and he's going to hurt himself, you know, and you got to pull him away from it. He's kicking and screaming. He's mad, but you're doing it to help him. And I think the same is true of a lot of people in this country. They're going to be whining and crying and screaming the whole way. But ultimately, the country is going to be much better off 3 to 4 years from now.
You talked about Elon Musk and getting it down to 99 of these, line items or whatever. Government has been really, really big up until now. We may see a change in the next 4 years or so with government getting a little more streamlined and more efficient. How do you think that all of this is going to trickle down to our listeners? The way that we invest, the way that we prepare for retirement, and just the quality of life that we're going to have?
So it's like Elon said I can't remember what stage he was on, but I was watching him give a talk, and he said, just remember that every dollar the government spends is a tax on you.
Right.
When you really think about that now and you bring that home to roost, he's right. He is. I mean, so when they say we spent $500,000 studying, what was it, something about cats?
And they've got so many stupid
It
ones.
was just crazy stuff.
They were using leaf blowers on lizards in Florida to study the effects of how lizards would stand up to heavy winds. And I'm going, wait a minute. You mean when I look at my check here, that was part of what I paid for?
Exactly right. So I just think that, we're going to be looking, and I already see a more positive attitude
100%
across the board. Everywhere I go, and I talk to people, and I've been doing this long enough, and this is going to sound kind of crazy, but it's true. I've been doing this long enough, and I've lived around this area long enough. I can't go anywhere but what I see somebody I know. Just can't hardly do it. But the general consensus is people are just hopeful and have a little more skip in their step, if you will. And I'm excited for it. I just really can't wait to see what happens.
What's interesting, and I know we're running a little long in this segment, but I think it's worth mentioning, is that I don't know if it's you, but I have not heard word one from President Biden or word one about President Biden in the last several weeks or so, or the last month. I'm wondering if he's still around anywhere.
Well, the only thing I've heard was, him approving letting Ukraine use U.S.-made long-range missiles, which I cannot for the life of me figure out what he's trying to prove or do.
Yeah, I mean, I think ultimately, Roger Stone said, and I don't agree with everything this guy says, but I do agree with this, that I think the only logical explanation as to why he would do that is that they're willing to crash the economy and potentially trigger World War III just to make Trump's life harder. I think they're actually concerned that he might be able to end that war in 24 hours the way that he said he will. And I think they're trying to do everything they can to keep that from happening so they don't look like idiots. They're more worried about saving face than they are about the future of our country, which is why they got voted out.
I can't believe that could be the case because that's so terribly wrong. Talking with Randy and Jake of Floyd Financial Group, you're listening to the program today. You're hearing us here on this Saturday, and you're thinking to yourself, boy, these guys, their thoughts and their visions really align with mine. I wouldn't mind getting in and sitting down and talking to these guys because they're pretty bright and asking some questions about my retirement planning or at least my growing of my wealth so that I can retire the way that I want to. If that's you, give us a call this weekend, 417-889-7233. Request your no-cost, no obligation, no judgment Floyd Financial Group Retirement Review. We'll talk about anything you want to talk about, answer the questions that you need to have the answers to put you on a path towards a confident retirement. So make that call this weekend. You can spend about 60 seconds doing it, calling 417-889-7233. All you got to do is leave your name and telephone number, and Ashley will call you back during the week and set up that appointment for you. Once again, I want to underline no cost to this, no obligation, and certainly no judgment. We'll meet you where you are. 417-889-7233. Also invite you to go out to the website. Check us out online, FloydFinancialGroup.com. We'll take a break, gentlemen. When we come back, we're going to dive into everybody's favorite subject here, I say facetiously, that is taxes and tax planning. All that and more when our show continues here on 104.1 FM KSGF, where Springfield comes to talk.
Ready for another helping of some more real money talk? Thought so. Now, here's another serving of Show Me the Money with your hosts, Randy and Jake Floyd, with Jeff Shade.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about one of those things that everybody loves, and that is tax planning.
That's right. And you're saying it facetiously just like I did, too. If you don't know what facetious is, go ahead and look it up in the dictionary, the old Merriam-Webster. Anyway, let's talk about tax planning. It is so important, Randy and Jake. Taxes play such an important part in our financial lives and our portfolio. And I don't think there's much argument that maybe above healthcare, taxes is one of the things that we'll spend the most money on in retirement. But the thing that I've learned from you is that many people do not have adequate tax planning. And as a result of that, they're paying more than they have to. Now, I want to underline, we certainly encourage you to pay what you're required to pay, but many times people are missing out on opportunities because they haven't planned. So let's talk about the overview of tax planning to begin with. It really is a lot different than just having a CPA and tax reporting.
Well, that's for sure. I mean, in fact, I remember when I really first, this has been probably a couple of 3 decades ago now, when I remember talking to this guy, and I said, do most people really do a lot of tax planning? He says, no. He says, generally what they do is, for some people, they really want to get filed early. He said, so those people bring me a box of stuff in January. Then I have those people that bring me a box of stuff the 1st of April. Then I have those people that bring me a box of stuff and say, hey, can we do an extension and file this in 15 October? And we do that. And he said, but the biggest thing is, he said, for most of these folks, they are looking for me to help them with taxes. But when they come to me, they haven't done any tax planning.
Yeah.
And everything is a foregone conclusion. We just haven't filed it yet. And so knowing that and just being cognizant of the fact that when you liquidate a stock or a bond or a CD, CDs are mostly tax current unless it's an IRA CD of some sort. But when you liquidate investments and how you liquidate them makes all the difference in what your tax picture is going to be. And sometimes it can be a drastic amount of tax savings that sometimes, and we're going to talk about some of these things. In fact, I'll just bring up one right now. I mean, many times people come to me and they say, you know, they've been retired a while. They don't have any payments. They've paid their house off and all that sort of thing. They don't have any bills. And they say, hey, I want to go buy a vehicle, but I want to go buy this new four-wheel drive diesel GMC Denali pickup.
Whoa.
And it's $80,000. It's $90,000. And I don't like payments. I want to pay cash. And so we go out and we say, okay, well, where are we going to pull the money from? Have you got enough in your checking account? No, but I could probably spend 20 out of my savings account at the bank, but I need to pull 60 from my IRA. Well, the problem with pulling 60 from your IRA, that money's never been taxed unless it's a Roth IRA. That money's never been taxed, and so when you do that, it adds $60,000 to your regular income. And if you're already at $100,000, now you've put yourself firmly into the 22% tax bracket, and you're going to cost yourself $12,000 or $13,000, $14,000 in taxes to buy that pickup, rather than maybe considering, especially in today's world, even with interest rates high, we can find 60-month financing at 0 or 1.9%, and we can save ourselves all that tax money. So a couple of things happen when you, and this is a little bit deeper lesson, but if you're going to buy a vehicle, if you go out and you pay $80,000 for a vehicle, what do we know about that vehicle next year?
It's going to be worth about $70,000.
Or maybe less.
Or less, yeah.
Than what you paid for it. So we took our money out, we paid for it, we paid 22% in taxes at the federal level and probably 5% at the state level. Yeah. And we put that into a depreciating asset. Whereas if we had thought it through a little bit more, what we could have potentially done was set it up on payments, pay a little bit of interest, not put ourselves into the 22% tax bracket, and have the remainder of the money still able to earn for us rather than going strictly into a depreciating asset. So that's probably a pretty good tax lesson, in itself right there, about buying lump sum type things. But beyond that, we want to get into, maybe what a lot of people are wondering. So what's taxation going to look like under a Trump administration? Are we expecting changes in the tax brackets and that sort of things? What we really want to talk about.
Okay, so we know that the Trump administration is going to be tackling this. I have seen some things here for 2025 before the Tax Cuts and Jobs Act expires at the end of this year. Of course, we're hopeful that that will be continued. I'm excited about the standard deduction this year for married couples, $30,000 for the standard deduction, so I'm really on top of that. But also tax brackets, as you mentioned too. The tax brackets have been really low. Where do you think that they're going to go here in 2025, or do we know that yet?
Well, we don't know exactly what Trump is going to do with taxes, but I would say this. There's been a couple of things floated out there through the campaign. One of those is no taxes on overtime, and then the other one is no taxes on tips. Now, whether or not we'll actually get to see those things through to fruition or not, of course, Trump can't just change tax code. He'll have to get that, through Congress. But I will say this. I think he will renew his 2017 tax cuts because coming up in 2025, as you alluded to earlier, is when everything was supposed to revert back to where it was prior to 2017 when we put the new tax system in place, which the newer tax system that we have has saved Americans money across the board pretty much, and we have pretty much had the lowest taxes that we've had in a very long time. So I think he will extend those. Whether or not he'll get those other two things done that he wants to, I'm not sure. But, his mandate is to get our economy running strong, to get inflation pushed down, and he's going to do that partially by drill, baby, drill. There's two ways that we can get ourselves out of this. One of those is we can cut expenses, or we can grow the economy, or think of it this way, we might actually be able to do both. And if we could, there might actually be a light at the end of the tunnel, and it might not be a freight train.
Yeah, I hope not. The freight train coming down the track there, the big tax freight train, or the big tax freight train to the tax bomb, waiting for that to explode. I want to go back to the initial thought here in this part of our program here about tax planning. What is the most important thing that will affect how much taxes that we pay, and can we affect that thing?
There's a lot of pieces to taxes. So we have income tax, we have capital gains. There's many pieces that go into that, but just for regular, ordinary income planning for people, I would say that the source of the money that we pull is important. In other words, is it going to come from Social Security? Because, here in the state of Missouri, we now, effective this year, we don't pay state tax on Social Security. So that is a 5% savings, basically, or up to a 5% savings for people right there alone. So when we start factoring income, when we start looking at that, that maybe changes when and how we look at Social Security planning a little bit. The other thing is, do we have, and we see this today, what is the breakdown of our assets, that the money that we've saved in our 401k, in our savings accounts, and maybe a brokerage account, maybe an IRA, a Charles Schwab or a Fidelity or someplace like that. What are the breakdowns of those? Because each of those have a different tax what-if associated with them. So when we start looking at building income, one of the things we need to figure out is, number one, are we looking at this point in where we are in life, maybe we're not retired yet, maybe we're within 10 years of retiring, and we have a huge 401k or a huge IRA, and we're wondering, does it make sense to do a conversion to a Roth IRA so that we can save taxes in the future? Or are we in a position to where by doing that, all we would simply do is front-end load paying our taxes, and now we got to make up what we lost to the government, which we never get back.
No.
So we have to just factor many things into income planning. So what's the source of it? Is it Social Security? Is it interest income? Is it rental income? Is it capital gains? Long-term, short-term capital gains? Is it money from municipal bonds, which sometimes are not taxable at the local level and sometimes the state level? What do we have? What do we own? So income planning really becomes a little more complex than some people think.
Are different assets taxed differently, Randy? I mean, everything is not taxed at an ordinary income bracket, or am I wrong about that?
No, you're right. So if we look at, regular interest income, like from a bank CD or maybe a money market account, or in some cases, some dividends that we would collect out of a brokerage account, those things are taxed as ordinary income. Now, there are some dividends out of brokerage accounts that are called qualified dividends that if we stay within the 12% tax bracket, we don't get taxed on those at all. So that's another piece of income planning that we have to think about and how that plays into it. But that's a really good question. There's capital gains, short-term capital gains, long-term, state tax, federal income tax. There's investment tax. Right now I'm hopeful they will get rid of that. And I can foresee Trump trying to float something where that 3.8% could go away.
So tax planning, does that affect the order of withdrawals on things and which things that we want to draw from first?
It absolutely does. So one of the things we have to look at, and each couple's situation is different, couple or single or retiree, I should say. Everybody's situation is different. So some people, they're healthy, they're fairly young, they want to spend more money now and spend less money later. So we have to look at that and factor all that stuff in. None of us know what taxes are going to be in the future. We know what they are today. I think probably a realistic picture, and has been, that taxes would be higher. I don't know that that's always going to be the case. I mean, if we were to look back, the marginal income tax brackets are at the lowest they've ever been that I can think back to. I mean, prior to when they funded the Civil War, that's when taxation really became a thing. So anyway, we have to look at all those things. What is the source of the income? What's the taxability of it? When do we take income If we need a lump sum of money, when and how do we take that? Do we divide it up into a couple of payments? Like right now, this time of the year, I have people coming to me saying, hey, I want to pay off the last $40,000 on my house.
Mm-hmm.
And so I go out and I look at that and I say, okay, well, if you paid off $20,000 this year and $20,000 next year, and you take the money out of your IRA, it won't put you into the next tax bracket. You can remain in the 12% tax bracket, so that's okay. Let's do that. Let's get that done, but let's divide it up. Because if I put all 40 in there on this year, it's going to push you into the 22% tax bracket. You're going to pay an extra 10% on that 40,000 that you don't have to, right? So that's things that come up like that all the time. We're always cognizant of what's going to happen. I have a gentleman right now, too, that I talked to yesterday he is buying a new house, has one to sell, and was needing to close, and was looking at money he was going to take out of a non-IRA account to fund it. And he said, so does it make sense for me to do it in this year? Or if I wait till next year, or if I divide it up, what does it do? And we determined that really it was about 6 one way, half a dozen the other. So he's going to go ahead and close this deal up this year rather than waiting till next year. So that's some of the stuff that happens and how income tax planning. It's not that we set the plan up front and then it never changes. It's always an evolving, changing thing because life is evolving and changing, right? I mean, we don't know what's going to happen next week.
Talking with Randy and Jake of Floyd Financial Group, we're talking about tax planning. We want to continue this conversation here in our next segment. I want to talk a little bit about Rod Link, who's an important part of our team here at Floyd Financial Group, how he helps us with tax planning. But before we do that, I want to remind the listeners again, I know you've listened to the program, maybe every week you've heard me talk about this. This is the time for you to finally pull the trigger and do something about your retirement planning by calling 417-889-7233. If you haven't done that yet, here's why you should do it today. Because this is an opportunity for you on a one-on-one basis in a casual environment to sit down with Randy and Jake and get the questions answered that you need to put you on a path towards a confident retirement. Now, we can talk about pretty much anything. It can be Social Security optimization, when to take Social Security. It can be income planning. It can be investments to support the income planning, whether or not I'm going to run out of money or not, some strategies for that. Of course, tax planning, healthcare costs, legacy planning. Floyd Financial Group is a comprehensive financial advisor. We do all of that every day in our business, and we're happy and proud to offer this opportunity to the fine people here listening to us in Springfield. So go ahead and make that call right now, 417-889-7233. Leave your name, telephone number. Ashley will call you back during the week and set up that appointment for you. No cost, no obligation, and don't worry, there is no judgment. We'll meet you where you are. Once again, 417-889-7233. Also, you can go out to the website, check us out there, and ask for your appointment there at FloydFinancialGroup.com. Time for a break, Randy and Jake. When we come back, we'll continue our conversation about tax planning and more when our show continues on 104.1 FM KSGF, where Springfield comes to talk.
We're back with your financial catch of the day, and it's a big one. Here's more Show Me the Money Radio with your hosts, Randy Floyd, Jake Floyd, and Jeff Shade.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to continue with tax planning and I would also say tax changes, right?
It is a situation where, if I make the analogy, you're a football player, you're getting ready to kick that football, you're all lined up, you see the goalpost in front of you. Just when you're getting ready to kick the ball, make contact, the goalpost move to the left or the right, and all your plans go out the window. How do you do tax planning, Randy and Jake, when the goalposts keep moving so much? Because you may have made a tax plan a couple of years ago. It could be totally irrelevant now.
Well, the first thing is you got to have somebody in your corner that's watching that. Not just us, but we have a guy here that we've dealt with for many, many years, Rod Link, who has Linked Tax Solutions as well as professional tax and accounting down in Nixa. And he is always, in fact, many times I call him or I'll text him and he'll say, "Can I get back to you? I'm in a tax seminar." So he's always keeping abreast of what's going on. And I will tell you, he's helped us in our business in the past to save thousands and thousands of dollars of taxes. And so you got to have somebody that's in the know to help you know when to change this thing, because you may not be looking up at the goalpost. You may be looking the other direction when the goalpost moves, right?
Right.
So case in point to that, about tax changes and things like that is, there's been a lot of wealthy individuals over the last 4 years that started changing their estate plans and figuring out how to avoid some of the estate, or sometimes called the death tax. A lot of people don't realize that if you have an estate over a certain amount, that it gets taxed at somewhere usually between 40 and 55% of whatever that is if you hit. And everybody thought that Biden was going to lower that number, like he wanted just the opposite, to raise, what capital gains taxes were. He wanted to lower the amount that you could exempt over your lifetime and pass to your beneficiaries. But just, again, having somebody that's in your corner that can see these changes coming and help give you advice is really where you need to be.
And we made the analogy of the footballs, and when I think of the tides of the ocean as well, too, we had Bill Clinton, who was a blue tide. Bush would be a red tide. You had Obama, which is a blue tide. And then, you had Trump with the red tide. And then we went to Biden, which is the blue. And now Trump again, which is going to be the red tide. So things keep changing, and you really have to stay on top of that. And Rod Link, of course, is so important to our firm here at Floyd Financial Group. So when something comes up whereby you're making a financial planning decision, we talk about tax preparation, which is on the other end. It's looking through the rear view mirror, but let's look through the windshield. Is this another area where Rod Link can help us at Floyd Financial Group that, maybe we don't know the tax consequences of a decision that we want to make, and he brings it to light that if you do it this way, it's going to be this much tax, and if you do it that way, it's going to be much less tax. Is that how it works basically with Rod?
By all means, that's exactly it. So let's just talk about a couple of things. So let's say that you are one of these people, you're 55, you're 10 years from retirement, you've been successful, you've saved your money, and you've got IRAs you want to convert to a Roth IRA. So why would you want to convert a traditional IRA to a Roth? Well, the traditional IRA, none of that money has been taxed. If it's a 401k that's traditional, that's not been taxed. So when you spend that money, it's all subject to taxation. The Roth IRA or the Roth 401k, once you've had those open for 5 years, you will get all the growth and everything out of those tax-free. So let's say that you've got this large IRA and you're looking to convert it. If you've got 5 or 10 years, it could really make good sense to probably convert a portion or all of that to a Roth from the traditional. Now, you're going to pay some tax up front right now, but know this, that on the other end, for the rest of your life, after 5 years, you're going to be able to take withdrawals, gains, and principal tax-free out of those things. But here's the thing. We don't know who it makes sense for until we've sat down and we have this conversation with people, learn exactly where they are, what's important to them, what their income stream needs to look like, and what they're planning on, and what their Social Security, or maybe if they have a pension, what that's going to look like. And where that pension comes from. State of Missouri pensions get an exemption up to $100,000, before you pay state tax and things like that. So there's a lot of moving parts here that we have to look at as to how we maybe want to convert IRAs to Roth IRAs or 401ks to Roth 401ks. And Rod can run all the what ifs and show you exactly what those numbers look like. And we will see if it makes sense to do or not, because we have to remember, after we pay the tax, when we transfer that money, we're always going to have less money to earn for us looking forward than we had prior to paying the tax. And that's why having more time to do the conversion is generally better for people rather than being squeezed right at the tail end, maybe a year or two, or maybe you're in the middle of retirement thinking you still want to do it. It may or may not be a good decision for you.
And I know that Rod has some rather sophisticated tax planning software too, and it's updated every year. I mean, there are programs that run in the background that can maybe alert you to some things as you're doing some tax planning that will help you decide which way to go with taxes. So tax planning is so very, very important. How often is Rod Link in our office, and how much does he really contribute to the overall financial plans? I mean, I would imagine it's a very big part.
Yeah, so, it depends on each plan as to how much involvement we need from Rod. But he's here, he spends at least a day in the office here with us to help us, navigate all the tax planning that we need to do for people. So, yeah, he's a big part of it. Sometimes it's really important on the front end. Sometimes it's not important until people retire, whether that's, 5 years, 2 years, 1 year. But always, we're going to be looking at if there's ways that he can help us save tax money for clients when they retire.
I want to talk about capital gains taxes a little bit. It reminds me of a true story, a fellow that we came across here probably about a year or so ago, not with Floyd Financial Group, but somebody that I heard about. This gentleman bought Apple stock 30 years ago. And I think 1994 it was trading at like 25 cents. Well, he bought a whole bunch of it back then. Today it's worth about $750,000. And he's worried about capital gains taxes. How do you think that capital gains taxes are going to change, or will they change here under the Trump administration?
I think they absolutely will change. I think it's very likely we'll eliminate the higher tax bracket for capital gains. We'll go back to 15% across the board. I think that we will not be constantly trying to get rid of the step up in basis or long-term capital gains rate. And to Randy's point earlier, the 3.8 extra Obama tax, if you have a gain over $250,000, I think there's a good chance we'll get rid of that too. And so all that will just help grease the wheels of interaction. You know, I know we're talking about taxes, but I think we're going to see mergers and acquisitions of companies free up because the regulatory environment will be less. I think we'll see companies, you know, that are starving for capital get IPOs and things like that to where they can access capital markets and move their businesses forward. I think there's a lot of people don't understand how important that is. There's a lot of these companies, these that are kind of startup companies, they're great companies, but they need some cash to go to the next level, or they need to be bought and brought into the fold. And if they don't do that, some great companies are going to go bankrupt. You know, we need to be able to have business be business and not be clamped down on regulation all the time. And so that also applies to trading stocks, trading land, and all that kind of thing when it comes to capital gains. We need that to be less penalizing than it is right now for the future of America to be brighter and brighter.
That's right, Jake. We need to be on the creative side of everything.
Yep.
We need to be looking, how can we make it better? How can we grow it? How can we change it? Not, how can we tax them some more?
Yeah, right. Well, you know, that's the reality of life here, at least it has been in the country, is how can we get more taxes out of people? Because we're spending it right and left here, and I'm really hopeful that things are going to change in the next 4 years or so. I want to talk about estate tax and death tax. How do we see those changing under Trump, and where are they now?
The death tax, I think right now, and there's a little extrapolation, it's around $23 million that a married couple can pass on to their beneficiaries without having a death or an estate tax. One thing that people haven't thought about is the fact that if you have large IRAs and you have land and maybe rental properties and all that sort of thing, there was a big possibility that if Biden had gotten his way, he would have really put the hurt on some people. Right now, that $23 million, I don't know what Trump will do with that. I don't think he will mess with that or probably change that much at all. I think he'll probably leave it where it is. I don't think he will eliminate it. I think it's high enough to where it's probably going to stay, because under his tax code that's still out there, I think, you know, this is where he wanted it to be. So I don't foresee much changing there. But, you know, if they do change it, and what Biden really wanted to do is pull it way down. And again, that's that tax that once you hit the threshold of what you can give away, they charge you about 50% tax on every dollar over that. So that was a whole big planning strategy years back that Trump kind of eliminated when he raised those really high in 2017. But there was a whole strategy out there using life insurance and irrevocable life insurance trusts to pay your death tax that really are probably not needed as much now. There's exceptions to every rule, and there's, you know, for people that have more than 25 million or so net worth, I mean, they still need to do planning, but for the 99.9% of us,
mere mortals,
That's right.
we're okay.
I'm going to wrap this up with an old cliche. We've all heard it all of our lives. Two things certain in life: death and taxes. We've cheated death a little bit with modern technology and medicines and so forth, and we can affect death in that respect, but it is inevitable that's going to happen. With taxes, there are some things that we can do about that too, and I'm finding that without proper tax planning, many people are paying more than they really need to. So if you're hearing the program today and you're thinking to yourself, you know, I wonder if I'm paying more taxes than I actually have to, I'm wondering how I can rectify that. Well, I'll tell you how you can do it. Call 417-889-7233. Get in touch with us here at Floyd Financial Group. We'd love to sit down with you, talk about your situation, which would include tax planning and tax reporting. Again, it's not going to cost you a dime. There's no judgment. There is no obligation at all. And, of course, there's no cost. Again, 417-889-7233. Make that call this weekend. Leave your name, telephone number. Ashley will call you back during the week and set up that appointment for you. 417-889-7233. Also, check us out online at FloydFinancialGroup.com. Time for a break, Randy and Jake. When we come back, we'll continue to talk about taxes, but this time we'll talk about tax deadlines that we want to be aware of before 2024 comes to an end. When our show continues here on 104.1 FM KSGF, where Springfield comes to talk.
People of the Ozarks, step away from the fishing pole and prepare to be shown the money, because we're back with more straight talk and honest answers with Randy Floyd, Jake Floyd, and Jeff Shea.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about the 5 tax deadlines you need to remember before December 31st, 2024.
Right, the end of the year is going to be here before you know it, so it might be a good idea to start thinking soon about what you need to do for taxes before it arrives. We have roughly about a month and a week left in the year. We don't want to wait until the last minute for this stuff. What do you think would be the number one thing that we need to worry about here, or at least think about or plan for before the calendar flips over to 2025?
Well, for those that have IRAs and are in retirement and are 72 and older now, and remember the RMD age used to be 70 and 1/2, but now it's 72 and soon going to 73, and for a lot of people it's soon going to be 75 before you have to withdraw money from there. But if you are 72, you need to take a required minimum distribution before April 1st of next year. Now, you should probably go ahead and take it this year, because if you don't, you will end up taking 2 RMDs in 1 year, and you don't want to do that because it's possibly going to put you into the next tax bracket. But remember this too. If you don't take it, it used to be it cost you 50% of what you didn't take, but under the Secure Act 2.0, it is now 25% of what you did not take that is the penalty. And so you really don't want to go there.
No, I thought you were going to say it's even more now. You were going to say, well, they're demanding that now you give your right arm if you don't take it. 50% to 25 is, that's a step in the right direction, but it's still hefty.
Oh yeah, for sure it is. Especially, if you've got a $500,000 IRA that first year, it's a little less than 4%, but you're talking 20,000, and 25% of 20,000. Let's see, what is that? That's $5,000, right? You could fund part of Christmas with that.
Right, and part of Christmas depends upon how many grandchildren you've got. Are there exceptions to this rule? Is there any way that we can get beyond 2025 with this?
Well, I guess if you don't get audited, they might not catch you.
Well, I understand that there's a first. Let's say that this is the first year that I turn.
Yeah, for sure.
The age. Do we have an extension on this at all?
Yeah, I kind of alluded to that earlier. That the first time, if you were, that you get till April of the following year from when you age in. And so right now, that new age for this year it was 72. For next year it's 73.
Right. Okay. Well, I just wanted to reiterate that because some people may not catch everything that we say here. Okay. So RMDs, very important before the end of the year. If it's the first year for you, you have until April 1st of the following year. Okay.
Let me add one last thing in there, Jeff.
Okay.
So if you're going to wait till April, just know that you're going to set yourself up to have 2 RMDs in 1 year. So if you do, now you're going to have a $40,000 addition to your taxable income, not a 20 in the example I used earlier. So it could push you into that 22% tax bracket where we don't want to go, because that's not good.
Okay, so RMD is number 1. What is number 2 in the hit list, Randy?
So number 2, let's talk about Roth conversions. There's a lot of people out there starting to do these. So basically the Roth conversion you have to do within the calendar year. So that's by December 31st. And the reason I bring that up, if you are funding a traditional IRA, whether that be Roth or just an IRA outside of a company plan, you have until 15, or it used to be 15 April. It always confuses me now. It used to be that the tax deadline was always 15 April. Now it's whatever it is around that following Monday, right? Mm-hmm. So anyway, you have until then to fund traditional IRAs and things. But if you're going to do a conversion, you don't get to do it through that next year. So if you want to get it on this year, on this tax year, you need to do it before the 31st of December. And let me say this too, those things don't happen overnight. So if you're thinking you might want to do one, you probably need to get whoever your financial advisor is, or call us and get on the books to get that done, because it will take a little bit of time to get done. You got to set up the account, you got to get the money transferred, and then we have to talk about taxation and all the things that go into that before you even pull the trigger. So don't, as my dad would say, dilly-dally.
There you go. And if you want to call us here, 417-889-7233. 2024 has been a pretty good year for the stock market, but for all the people out there who are picking stocks on their own, you probably have some losses. So let's talk a little bit. Is it important to realize losses and gains at this time of the year?
Yeah, for sure. I mean, there may be some things that you have that have not done so well, or maybe over time have not done so well, and you may have some capital loss out there that you could realize to help offset some of your capital gain. So remember that long-term capital gain is offset by long-term capital loss, and short-term capital gain and short-term capital loss, those are like ordinary income. They offset each other, but you can't cross the line of those two except for $3,000 per year. So if you have a long-term capital loss and you're wanting to use part of that long-term capital loss against a short-term capital gain, you can only use $3,000 per year.
Okay, now I've heard this term tax loss harvesting. Is that what it means at the end of the year? You're going to harvest out the losses?
Right. So if you've had a big gain year in some areas and you're looking to offset that, you can reduce your gains potentially by the losses that you could harvest. That's what that's talking about.
All right, let's go on to the next one, which is about charitable giving. What do we need to know about that before December 31st?
Yeah, so, you can do your charitable giving, and used to be, until a couple of years ago, whenever we would give money to charity, we got to do it on what's called above the line. We got recognition of that no matter what our other deductions were, we got that. But now, with the standard deduction being nearly $30,000, we have to breach that $30,000 if we just take money from an IRA, put it in our bank account, and send it out to the church or whatever charity it is that's a 501c3. So the QCD allows us to do up to $100,000 out of an IRA plan if we are 70 and a half or older. And what it does is it allows us to take that money and transfer it to the charity, and it never hits our tax rolls, and so it doesn't push us into the next bracket, and we get to get credit for it. If it's less than that, say it's $5,000 or $10,000, we're going to get credit for that all the way up to like $29,999, for next year. We'll get credit for that, or I should say we don't get credit for it. It just doesn't show up, so it's a moot point. The QCD is a very valuable tool for those that want to give to charity.
Yeah, and you were talking about the tax brackets here, and we were talking about the standard deduction, of course, $30,000. That has meant that a lot of people are not itemizing anymore, and it makes life so much easier for folks like Rod Link because people are not coming in with bushel baskets full of receipts wanting to sort those things out on April 14th. So it's been very good for him. But I think you were alluding to the fact that you can not only give money as a charitable contribution, but you can also give appreciated stock, things like that. Is that what you were saying, that you can gift those because the recipient doesn't have to pay taxes on the gains?
That is correct. You can do that because the recipient is going to be something, a 501c3, basically a nonprofit is what they're going to be deemed, so you can qualify for the charitable contribution.
Okay, so that is number 4. What is number 5 here?
So number 5, if you're looking to make a big purchase between now and the end of the year, if you're looking to do that, let's talk about maybe, do we break that up a little bit? Do we do it all in one fell swoop? Let's look at the tax consequence of doing that. And I would also say, along that same line, if you have multiple IRAs and things, and you're wondering, do I have to take all those distributions across all the IRA accounts because one may be more advantageous in the investment it's in than the other one? No, all we have to do is make sure that we cover the amount in total that you need to take from there. But let's calculate that before the end of the year and figure out where the best place to take it from is.
So December 31st tax deadline. So that's what we've been talking about here with Randy and Jake Floyd of Floyd Financial Group. And we'll try to get Rod Lincoln here sometime soon during the tax season to talk about that. And the tax season will be here before you know it. I think really the first or the earliest, Jake and Randy, correct me if I'm wrong, that you can file taxes here this next year is around the middle of January, something like that. But I don't know that there are that many people who are anxious to file their taxes.
Generally speaking, the people that do that are the ones that get their 1099s from basically bank CDs and money markets and things like that because they get them early.
Yeah.
And they know they're done and they want to get in there and get it out of the way and get it behind them. For a lot of people, they're waiting right up to the last day if they can for years, I tried to keep my money in my pocket as long as possible, and I filed extensions and paid a penalty. And people say, well, why would you do that? Because many times I had better use for that money during that 6 months delay than giving it to the government.
Right, and the penalty really wasn't that much, was it, as opposed to what you could make on that money if you invested it?
Right, exactly.
So was the penalty something like 1% or 2% or something like that? And if you invested it, you might make 6-7%?
Exactly. I don't remember what the exact calculation on it is. Rod would help me with that each year.
Right.
And then say, so this is your penalty. And I was like, oh, well, that's not so bad. I was
that's
always
not bad at
surprised
all.
how little it was.
Well, again, we're not suggesting necessarily that you do
No.
that. That is just something that Randy does. But again, I mean, you've really got to sit down with a tax preparer or somebody here at
Right.
Floyd Financial Group and decide what's right for you. We're not making suggestions that you should do this. It's just that what we may do is different than what you may do, and what's right for us may not be right for you. So again, any of the conversations that we have, we certainly would suggest that you talk to a financial person, you talk to a tax attorney, you talk to a CPA before you make any of these decisions. But we would love to help you out with tax planning here. I know that December is around the corner, and Thanksgiving, my gosh, that is just this coming week. Do we still have some time for people to get in and talk to us about tax planning?
Yes, we do, but time is getting to be short for sure. So, there's certain things, and I often tell people this, there's certain things that we just can't get done after the 15th of December. One of those things, there's a lot of companies that if we wait until 15 December and try to file to get our RMD, a lot of those companies will not guarantee that they can get it done for us by that time. So it's better off to call now, get on the books, get scheduled if you want to talk to us about some of these things we've discussed today. Because, again, time is short. I mean, here we are. I mean, we are basically, 51 days from the end of the year?
Something like that, yeah. I know Thanksgiving is right around the corner here, and that's hard to believe as well, too. So happy Thanksgiving to everybody before Thanksgiving. We'll be on the air after Thanksgiving on that Saturday. Typically, tax planning does begin around October the 1st, so if you're waiting until right now, you maybe waited just a little bit too long. So if that is you, call us today, 417-889-7233. Ask to get in for your Floyd Financial Group retirement review, in which tax planning will be a major part of that. But do it sooner than later. We hopefully will have enough time to make some difference for you before the end of the year, but certainly we can help you with your tax planning moving forward. 417-889-7233. You can also find out more about us online at floydfinancialgroup.com. Well, Randy, Jake, out of time for this week. Thank you so much for your time. But as always, every week, thank you so much to the fine, wonderful people here of Springfield, Missouri, the last bastion of sanity, for joining us. So for Randy and Jake, I'm Jeff Shade. Have yourself a great weekend. We'll talk to you again next week with another edition of Show Me the Money right here on 104.1 FM KSGF, where Springfield comes to talk.
The information provided in the preceding program is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representations as to its completeness or accuracy. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Financial planning is offered through Floyd Financial Group, LLC, an SEC registered investment advisor.